So let's get started with today's speaker. Joy Sorensen Navarre is the president and founder of the firm Navigate LLC, which works with physicians, dentists, and health systems around the country to help them manage student loan debt. She's been a member of this panel and greatly contributing to our understanding of how we all get through this crisis. Joy, welcome back. Your area, loans and loan repayment, is changing quickly, and we're all looking forward to your presentation today. I'm going to turn it over to you, Joy.
Terrific. Thank you, Dr. Park and colleagues today. It's always great to hear the tips from all of the esteemed colleagues, and definitely the more I listen, the more it just reinforces to me, now is the time to talk to an expert. So thank you all for being available, and Glidewell, thank you so much for putting this together. So I have a slide deck put together, and I'll share with you in just a minute. I'm going to start with the topic of student loans. And that isn't a topic that we've talked about yet in terms of a large presentation, but Dr. Park, you invited me to give that topic in addition to the small business loans, and I think we'll start with the student loans. Typically, there might be people on the call that don't have student loans anymore. However, folks that don't have student loans know people with student loans, and they might be parents of people that would have a student loan. And I'm also thinking there are people on the call today that do have student loans. And so this is an area of special interest for doctors and dentists because of the high cost of medical education these days. And so let's jump in. So when my son was little, you know, he is a fabulous young person now. He's an adult. But when he was little, he had a ton of energy and he was bouncing off the walls. And I was a young mom and I had never seen a kid like this before. And he was in a special preschool, and his teacher, Dr. Jones, I'll always remember Dr. Jones, about a month in said to me, you know, Joy, I've got this article I think you might be interested in. So I read the article. It was a story about a mom and a little boy who had ADHD, right? Now everybody knows what that is, but years ago it was not so familiar to all of us. And the fact that Dr. Jones saw me, saw my child, and saw this opportunity to come alongside us, to offer some coaching and some resources, really changed my life and my son's life, because we were able then to identify what was happening with him and get him the resources he needed to live a full life. So why do I tell you that story? Because I believe that whether we're talking about student loans or small business loans or practice loans, having someone come alongside us that's an expert that works on this every day, all day long, can be extremely helpful. And after we're done today, here's our roadmap, you're going to feel that you're in a position to to feel more comfortable about your student loan planning and take action if needed to make some changes. All right, so here's what we're going to talk about today. The new COVID CARES Act as it relates to student loans. We'll start with that. We'll then talk specifically about income-driven repayment plans, public service loan forgiveness, and then private student loan refinance. And then we'll end by talking about the Small Business Administration's COVID-19 loan resources. And Gary, I'm seeing just tons and tons of questions come in about this topic, of course. And so I'm guessing we're not going to get to all those questions, but we'll do our best. And everyone, I think, knows that there are not a lot of answers to all these questions. They're unfolding, and a lot of these are individual, and so we'll take some individual advice. All right, but we will do our best to get through. So let's just start. I'm wondering about the people on the line today. Without disclosing your own student loan balance or the student loan balance of your children perhaps or colleagues, but what have you heard might be the amount of student loan debt that a practicing dentist might be carrying today as they come out of school and start their practice? Let's see if people can throw that in either the Q&A or the, the chat box.
So it's a range from 200 to 500K, Joy.
Thank you. Thank you, Susmitha. Yeah, exactly. When we consult with doctors, that is what we're seeing. We're seeing 250 on the low end to 450, and that's just the common numbers. That's neither one of those are outliers. 250 to 450 are the most common numbers we see in student loan debt today. We see 550, we see 6. The most I've ever seen was 798, and that was a surgeon who was ignoring his student loans. So don't do that. Don't ignore your student loans, right? Okay, so sometimes those of us that don't have student loans don't realize the pressure that doctors feel when they have these large student loans. And so let's just look at the numbers. If you owe $300,000, your monthly payment is going to be $3,500 on your student loan alone. All right. Back in the day when student loan interest rates were really cheap, like 1% and 2%, which they aren't anymore, people used to take the extended repayment plan. And so sometimes we see more seasoned doctors saying, oh, just get on that 30-year plan. I did it. It was just fine. Turned out just great for me. That is no longer good advice because student loan interest rates today, 5, 6, 7%, right? Changes every year right down. It's down a little bit, but it was as high as 7 just a couple of years ago. And if you have an interest rate that high and you pay on the extended plan, the interest you pay over that time period will be more than you owed in the first place. And so you actually double what you're paying. And there's a strong impact on doctors related to having student loans. Let's see what the audience thinks. There is research on this, but just anecdotally, what do you think the impact is on doctors having student loans? Or feel free to share your own or your children's feelings on this. And Sue Smith, I'll have you watch the chat box or the Q&A for us again. Thank you.
So it's a range from emotions like being stressed out, depressed, they don't pay them.
Mm-hmm.
And sometimes they feel it's an aggressive treatment plan, they regret having done it.
Mm-hmm. Yeah.
So
Bingo.
Anger.
Mm-hmm. Yeah, that's exactly. So it's Dr. Julie Phillips out of Michigan researches this. And you could all be, right, you could be doing the same research because this is exactly what she's seeing. A doctor with a student loan, they're showing signs of depression. They're putting off major life decisions, getting married, major purchases, buying into a practice, the dental practice loans, and in some cases, that sense of regret, right, of choice of career. So I'm really glad, Dr. Park, that we are talking about this today, because when we start talking about this, it becomes, the conversation in itself becomes a way of reducing the stress. We realize that we're in this together, and there are things that we can do to make a difference and to get through this together. We say it's time to flip the script on student debt. And we see it as education and tailored student loan advice being self-care for ourselves and those we care about. So let's get started. So the CARES Act does have relief for people with student loans. So if you have a federal student loan, your interest rate now is 0. And I've seen our clients have sent us pictures of their statements actually with the 0% because they're so excited about it. I get very excited about that too. That is terrific. That was a wonderful decision that Congress and the president made. Interest rates are at 0. All payments on federal loans for student loans have been suspended. So as of March 13th and through September 30th, there will be no student loans automatically taken out from your automated debit, and you will not have any payments due. And for those of you that are pursuing the 20 or 25-year income-driven repayment forgiveness or the public service forgiveness, each one of those 6 months of 0 payments, of suspended payments, will count as a month toward forgiveness. We've never seen this before. This is the first time they've ever done something like this, and this is a terrific relief for those of us that maybe have lost jobs or are not working as much or have other responsibilities right now. All right. So that's for federal loans. We're getting a lot of questions about, so what do I need to do, right? So the CARES Act says I don't have to make my payments, but I still have a bill due on my loan servicing site. What should I do? Should I opt in? Should I opt out? So they are a little slow at unrolling this, not surprisingly. But by April 10th, they're hoping that all loans payments will have been suspended, and you will have gotten a letter confirming that from your loan servicing company. We've seen many letters arrive already. If you're one of the people who hasn't received that letter yet, just hang on, it will happen. If one of your payments has processed inadvertently since April 13th, you can get a full refund of that payment just by contacting your loan servicing company and requesting it. They won't automatically refund those payments, but they will refund them if you request it. So you do not need to take any action to get the 0% interest, to qualify for forgiveness, or to get the payments to stop. It will all automatically happen for you. So let's dig into loan options for folks as we're doing some education. So in general, dentists have two different approaches that they take on their student loans, and it depends on what kind of loans they have. So we see people with federal loans taking certain types of strategies, and we see people with private student loans taking others. So let's talk about those together. So if you have a federal student loan, you're looking at different options for repayment plans. The ones in the pink, the standard, is just a 10-year standard repayment plan. We'll look at some numbers in a minute so you can see this together. The graduated or extended plans are the ones we talked about earlier that typically people are not using because they are not beneficial on the long run. The income-driven repayment plans, we see a lot of physicians, a lot of dentists using these right now, because especially as they start practice, as they have higher debt obligations if they're buying into a practice or with a dental loan, it's nice to keep those student loan payments lower at the front end. And so these payments are based on a physician's income. If it's a physician owner, it's based on income after expenses. And so it's a way to keep your loan payments low as you're focusing on some other financial goals. So let's look at Dr. Susan. She owes $350,000 in her student loans. Her monthly payment is about $4,000, huge payments. Over 10 years on the standard plan, she'll pay a total of $472,000. She'll have nothing forgiven. She'll have it paid off in 10 years, and she'll be done in 10 years. She told us that really the only number she liked in that column was the last one, that she'd be done in 10 years. She didn't want to be paying on these when her kids were going to school. So we looked at some options for her, and what she ended up doing was using one of the income-driven repayment plans. These are her federal loans, and using the 20-year forgiveness. And so this is what it looks like for her. She has the same amount of student loans, $350,000. I'm in the column on the right in the green. But look at her monthly payments in the second line. Her first year of monthly payments are $0 because that payment is based on her income the prior year when she was still in medical school and dental school and not making any money, no income. But as time went on, at the end of the 20 years, her payments would be about $2,100. And of course, this would depend on how much she's making. The more she makes, the more she'll pay. She'll pay about 10% of her income for her student loan each month. And we calculate about $2,100 would be her monthly payment at the end of 20 years. So over that time period, she's going to pay a total of $352,000. So it's a savings on the payments up front or along the way of over $100,000. But most of us know that these income-driven repayment plans have a tax liability on the back end. And so she'll have $438,000 forgiven as part of this plan, but then she'll owe taxes the year in which that is forgiven of approximately $131,000. Huge tax liability on the back end that anyone who's pursuing this plan needs to be saving for along the way. just for estimating purposes, probably if a person saved $300 to $400 a month for their tax liability at the end over 20 years at a 4% rate of return, you would have that money saved on the side. So if you are pursuing this, you must be saving money on the side to be preparing for that tax hit at the end. All right. So Smith, I'm just going to stop here and see if there are any questions from the audience that relate specifically to student loans, or Dr. Park. This might be a good time just to pause to see.
Sure. There's tons. Okay. I have federal loans obtained from 2005 to 2009 that were processed through a state-owned lender, not a federal lender. The state-owned lender said they don't participate in the zero interest forbearance. Is there any way I can transfer these loans to a federal lender? I used to have other loans with a federal lender, but these have already been paid off.
Gotcha. Great question. Sometimes yes, sometimes no. So it would depend on the loan type. There are some of those loans that were in an older loan plan that were owned by not the federal government, but they had the guarantee by the federal government. Those are the type that are eligible to be rolled into a new direct consolidation loan through the federal government. And then they are eligible for the 0% interest rate and the suspension of payments. The way to check that is to go to studentloans.gov and enter your login information and pull up under your loan details. And there'll be a chart that comes up. And if your loans are on that chart, then they are considered to be eligible for the direct consolidation. If they're not on that chart, then unfortunately, they wouldn't be.
Okay. I've got tons of questions, so just stop me when you're tired of questions. Okay, you need to go on. I've been paying off my student loans for 6 years now. If I change my payment plan, would I have to restart my 120 payments?
Great. So it sounds like that person is pursuing public service loan forgiveness. And in that event, because that requires 120 monthly on-time qualifying payments. When you change a repayment plan, it does not restart the clock towards the 120 payments. What the person might be thinking about is if you apply for a direct consolidation loan and get a new loan, that will restart the clock. But changing repayment plans does not restart the clock towards the 120 required payments.
Okay. And what if you want to keep making student loan payments to take advantage of the zero interest? So I feel like you can probably knock some of the balance down.
Yeah, that is a great question. The only time that is everybody's different. So Dr. Park, I'm in Minnesota. We say, like snowflakes, every borrower is different. Got it?
we don't get the metaphor here in California.
Yeah, I was afraid of that. We do have a snow forecast for Sunday, sadly. I don't even want to talk about that. Anyway, so in the event that a borrower is pursuing federal borrower is pursuing the income-driven repayment plan, and they have interest that has accumulated, and almost always there is, because the payment that's due doesn't always take care of the full amount of principal and interest due. The income-based payment is often lower. Rarely in that case does it make sense to make extra payments. Isn't that crazy? You would think that it would. We've run these numbers many, many times for our clients. When it does make sense is if your income-driven repayment is already really high, and so you're already paying off all the interest that's due every month, then definitely just keep working on that. If you have the cash flow for it, make the payments during the time of suspension. However, alternatively, if you're on an income-driven repayment plan or public service loan forgiveness, and you have interest that's already has accrued prior to this, often does not make sense to make extra payments.
Okay. I applied for forbearance about a week before the CARES Act passed. Shall I discontinue the repayment plan?
I do not know the answer to that question. I have that exact same question. So that would be a question for the loan servicing company. And unfortunately, about half of their call centers are closed. And so you might call, and it's just luck of the draw which one you get diverted to. So just keep calling. The best time to call is first thing in the morning rather than the end of the afternoon. First, any time in the morning is a good time to call. Usually the call wait times are less than.
On a similar note, here's a doctor that just put student loans into forbearance for the next year, and they told him that they would still accrue interest during this time. With the CARES Act, does that stop the interest accrual until September 30th?
Right, we would hope so, but we don't know for certain. So that's a phone call to the lender to find out.
Okay.
There was an executive order about 2 weeks prior to the CARE Act that offered forbearance, but not the 0% interest rate and not the suspension counting towards forgiveness. And we would hope that they would automatically shift people to the new type of forbearance now that it's available. But having worked in this field for a long time, what seems to be right doesn't always seem to be what happens. And so that's why a call is needed.
Yeah. And sometimes what is common sense is not actually how the rules are applied. Right? Okay, why don't you move on? I think we've handled most of the major categories for student loan questions.
Thank you, Dr. Park. So these were just to finish up here on the student loans. Very important if you're on an income-driven repayment plan, don't miss your annual recertification. So the cartoon or the dinosaurs. Did you wonder what had happened to the dinosaurs? Now you know. Okay. And then this one is about loan servicing companies don't always give you the best advice. It's one of the things that we do that we're really happy about is that we get on the phone with our customers and help them figure out with their call to the loan servicing company to get the right answers. Got a very high BS meter, so we can tell when they're getting the runaround. Public service loan forgiveness, just real quick, the numbers on this, on the right-hand side, this borrower is using public service loan forgiveness. They have the same amount of debt on the right-hand side, that $350,000. Their payments are about the same, a little bit less because it only goes for 10 years instead of 20 years. But look, they're going to pay a lot less, $132,000, and there is a big amount forgiven, but none of that is taxable. So a lot of folks have the misconception that the public service loan forgiveness is taxable. It is not. So it's just the monthly payments that you make on that you have to prepare for. A lot of people are worried that public service loan forgiveness won't be here for them. It will be. We know dentists and doctors who have received it. And so the importance is that you need to pay attention to the details on these kind of plans, just like we've spoken about earlier. You have to have your I's dotted and T's crossed, as we've heard people say at earlier programs. Okay, if you have a private loan, and this applies to student loans here, what we're talking about right now, a lot of folks are refinancing. Right now, if you have a federal loan, you probably don't want to refinance because you can't beat the 0% interest rate. And on the private market, rates are really different depending on the bank you use. Some rates are increasing, some rates are coming down. It's sort of a free-for-all over there, depending on the source of capital that the different banks have. But you could save a lot of money by refinancing, lower your payments by $500 a month, save thousands of dollars overall. We send people to credible.com to shop for interest rates. And if you go to the White Coat Investor, a lot of you are reading him already. He has bonuses. If you use his links, you can get a $500 cash back, $300 cash back, and every dollar is important these days. Okay, so and this is an example of Susan. If she would have refinanced at 4%, she would have saved $50,000. I'm comparing the principal and interest paid on the third line, 472 to 425. So that's why people refinance, to get out of those high interest rates into a much lower interest rate for their student loans. All right, so now if you have questions, please feel free to contact me. This is my email address. I would be happy to consult with whoever would like to about these kind of questions, and that's the best way to reach me, or Glidewell has my number too if you don't get it right now. All right, so some basics about the COVID-19, the CARES Act. A lot of you are really smart on this already because you've done your research, you've talked to Gary, you've talked to other experts. So here are some basics. So the Small Business Administration has two major pools of money available, the EIDL loan and the PPP. And we'll get into both of those here in a minute. The other thing that is available is enhanced unemployment. And so if you are a dentist who is an employed dentist, or even a self-employed dentist, there is assistance for you. And the way to find it is to apply online through your state unemployment office. So this is assistance that is different from the SBA assistance. This is enhanced unemployment assistance through your state unemployment office. Typically they've got great customer service if you're having trouble with the online application. And I bet you Gary could also help with some of these questions. All right, so back to the EIDL and the PPP. So who is it that qualifies for these? Any small business that has less than 500 employees would qualify for these two special loan programs. So it is also sole proprietorships, independent contractors, number of independent contractors on the call, I'm sure, and self-employed persons, also nonprofits and others. So the EIDL, we throw around these acronyms, but it's called the Economic Injury Disaster Loan. This loan has two parts. There is an advance of up to $10,000. That advance is like a grant. It's free money. And at the beginning, they say they would get it out within 3 days. I don't know if anybody has gotten their money yet, so now their website has changed and they say within days you can get this money. The application for this is very simple, and it's tied to the larger economic disaster loan. And you can get the advance whether or not you get approved for the full economic injury disaster loan. So it's something that if you qualify, it really makes sense to consider. These are the EIDL uses. So for payroll, paid sick leave, costs to support supply chain disruption, debts, rent, and mortgage payments. All right, so very broad in terms of the uses for the EIDL loan. The PPP is the second loan that's available through the Small Business Administration. It's called the Payroll Protection Program. The idea of these is that we would keep our employees on board for longer during this time of crisis. And so its uses could be for payroll, health benefits, insurance premiums, employee salaries and commissions, payments of interest on mortgage obligations, rent, utilities, and interest on debts. So many questions abound, and I saw some earlier on the Q&A about can you apply for both, and the fact that the ADA had said that you couldn't. They have revised their alert now, and it is true you can apply for both, but you can only use it for, you can't double dip. You can't apply for both and use it for the same thing. So you have to use the EIDL for one set of financial issues and the PPL for a different set of financial issues. That's how you can use both. So you can tell from all the questions in the Q&A that there's a lot of uncertainty about how to use these loans, how to apply. So let me give you some ideas that I have about getting good advice right now. So the PPP needs to be applied. You apply for that through your banker. So it is banks that have this. Typically, if you already have a business account through a bank, that's where you're going to get the best help. A lot of banks are limiting or giving priority to their current account holders. So that would be the first place if you're considering applying for one of these that you should go to. There are also amazing consultants like Gary, your CPA. You might have an HR or benefits consultant you're already working with. All of those folks are really smart on this because they all have customers like you that are asking the same questions. And so they, as a matter of professionalism, have gotten really smart. The ADA also has some great resources. And then for folks that might be a smaller business, a sole proprietor, and maybe don't have these relationships already, the Small Business Administration is offering webinars, often through a local chamber of commerce or the state Department of Economic Development. These are fabulous online resources, educational resources, and typically they've got Q&A.
No,
Go
I
ahead,
just wanted
Dr.
to
Park.
ask you, there was a really good question
Yeah.
among the questions of a doctor that he really hadn't borrowed money in many years, so he didn't have a banking relationship. And he called up some of the large commercial banks and they said, no, really, we're just working with our current customers right now. What advice would you give for an individual that really doesn't have a good banking relationship in existence?
Yeah, that's a great question. We had that same question from a colleague. And what she did was she went to one of her third-party buddies, right? One of the, her CPA and her HR benefits consultant, or it could be a person like Gary who's on the legal side. They all have relationships as well with banks and will often be able to tell you who might be available, who is accepting applications from banks where they don't have a current relationship. It might also be that you have a relationship with a bank that's not a line of credit relationship or a loan relationship, but it's more like a checking or a business checking relationship. That also counts for a relationship. It doesn't have to be a loan relationship.
You might also want to check through your patient base and see if any of them are working for some of the banks that they might build out their free dentist. That's the well I used to go to all the time.
You are so smart. Perfect. What other questions do we have? And if Gary's available, he might like to join us on this too.
I'm just hearing a lot of people that have applied and they haven't gotten the money. They're wondering if other people have received the money. You know, all this stuff about, hey, this stuff seems like it's too good to be true. And it turns out that sometimes it's just not coming forward. What are your feelings? Is this just sort of in the beginning, there's some rough spots in getting these things to work? Or is it possible we may discover that these things aren't quite as generous as we thought?
Yeah. We're going to wait to see how these things unroll. It's a huge issue across the country. We know Congress is looking at another phase. So I just tell people, you know, stay calm, carry on. This is the time just to wait and see.
Okay. We have a doctor that says that a particular bank, the home bank in Louisiana, is accepting applications from anyone.
Nice.
I don't know if that's anyone in Louisiana or anyone, but thank you for sharing that.
Great.
Home bank in Louisiana. Okay. I've heard there may be a second round of PPP loan and it's worth it to wait closer to your time of opening. Is that true, or should I apply and get it before the rules change and it's not as forgiving?
That's a very good question. I don't know if anyone has the answer to that. Gary, are you listening? Do you have a thought about that?
Yes, no, I'm listening, and I've heard the same thing. And you know, trying to time this thing is a fool's errand. I think I don't know. But you know, all I can say is good luck. I hope it works out for you. Yeah. It's really difficult to know. You know what will be available in the future, and what you need to do exactly. You know, personally, I thought that the closer you got to April 26th to get the loan, and then you could get the people back and use the loan within that first 8 weeks.
Right.
You know, it's tough.
Yeah, I'm going to quote my older brother here. He says, "If the government is going to give you money, you should take it."
You know, the worst you do is repay it, and if you didn't use it, if you didn't have an opportunity to use it on forgiveness purposes, you give it back.
Yeah.
Okay. My friend Randall Brown is saying that payroll under PPP includes employer contributions to retirement plans.
That's correct.
Thank you, Randy. Appreciate that.
And healthcare.
Okay, great. Health insurance. That's great. Okay. For the $10,000 grant, if we receive that, should we open a separate bank account so that we can show exactly where that money went?
I think that's a great idea, Joy.
Yeah.
You know, it's all going to be about documentation on the back end.
Right.
So these loans look like they're really easy to get on the front end. You just have to be able to fog a mirror, and you're going to get the loan. But proving they were used for forgiveness purposes or what purposes you use them for, you want to keep really detailed records.
And as far as I know, the rules about how forgiveness happens haven't been laid out yet.
Yeah, they certainly haven't been clarified. Okay. For the EIDL, the EIDL application, do I have to apply in person at the bank, or is online application, will that work?
The EIDL is an online application. The bank is not required.
Oh, okay. There's no bank involved in that. Okay, gotcha. Okay. What for an employed dentist? What about having your employer pay some of the loans with their PPP loan? Is there a limit of how much they can pay for an associate?
Yeah, the PPP loans for wages, for rent, and mortgages and utilities. So I don't think that's going to be covered paying off a
It would
student.
really just be a wage to the doctor, right? He's paying
wage.
and he uses it in turn, right? Okay.
Was that a question about student loans, Dr. Park, or just in general about wages?
I think in general, specifically with the PPP.
Okay, because there is a section of the CARES Act that allows employers to provide student loan assistance up $5,000 some dollars a year. That's something new as a retirement type benefit. It's non-taxable. Something we
that's
had
interesting.
never
So
seen before.
if it's a retirement benefit, maybe it would be forgiven or forgivable.
Yeah.
Okay.
Boy.
And also, we have a doctor here who's his business arrangement or her business arrangement is an LLC. Does that change any of the relationships here? We talk a lot about sole proprietorships and incorporated practices. Does the LLC change anything about it?
It shouldn't. Nope.
No. Okay. All right. There's a lot of questions here. They're mostly related to some people's individual circumstances. So we'll answer all these questions and we'll get it posted. Thanks, Joy Navarre. Fantastic presentation. You really understand this topic in a way that very few people do. Gary, as always, thank you so much for continually answering these questions. Dr. Roger Levin, thank you for your wisdom in this time of craziness. And Dr. Hochberg, what can I say? Great understanding of what you're doing, and I think it's a great model. You've been a successful practitioner for more than 40 years. I think you probably are doing a few things right along the way, and for people to listen to you, I think that's a great thing. So Dr. Chi, Dr. Matalili, Andy Klein, thank you all very much. Susmitha, thank you so much for navigating us through all of this. And take care, everybody. We'll be back tomorrow. We'll have a clinical lecture in addition to our business advisory panel. So thank you very much.